This conference will now be recorded.
Good morning, and my name is Joe Tritola, and I will be your presenter today. And today's topic, although it's going to be very quick, under 15 minutes, we are going to be talking about CSG and how it relates to quoting for both Medicare supplements as well as final expense. Three main things we're going to look at is the ease of use, the fact that we include it at no cost to our agency and agent partners, and most importantly, it is a very, very, very powerful selling tool. Before I begin, there's just a couple of things I need to go over because this is going to be in public view. There's a few disclaimers. Number one, this is not intended to replace AHIP or any specific carrier training. It is meant as a guideline only. The agent is ultimately responsible for knowing all the rules and regulations. The presenter, which is me, I am not affiliated with CMS, Medicare, Medicaid, the United States government, any state or local government, the VA, SHIP, or PACE. This course is not endorsed by any of the above. It is assumed, if you are having conversations about Part C and Part D, it is assumed you have permission to call and you have documented a scope of an appointment prior to any of these conversations. And always, always, always refer the prospect to Medicare, Social Security, or their local Department of Social Services for information pertaining to help or financial support in regards to their health care. So that's out of the way. Had to say it. Couple of different things. Before you get into quoting somebody, and if you're working the field of Medicare as well as final expense, if you're working in those fields, before you start to get into quotes and how much does a plan G cost and what does an N cost, there's a couple of good tips and good practices that you want to try to remember ahead of time. And first and foremost, it is always important to ask the prospect's date of birth and their age. Reason being is oftentimes, inadvertently, they make themselves a year older or a year younger. As people get a little bit older, they tend to become a little bit more forgetful. As we get closer to our birthdays, we tend to round ourselves up. And having someone's age off by 1 year will have a financial impact on whether or not that quote is their quote or not. So good practice is always get the date of birth. Always get the date of birth. The second is you must ask for zip code, but also county. You want to know the county that they reside in. It's very important. Why? Because many zip codes will fall into multiple counties across America. Once in a while, I'll plug in a zip code and it'll sit within 4 counties. So you have to find out what the county is. Sometimes, not always, but sometimes the pricing is going to be very different from one county to the next, depending if that insurance company separated that state into regions. Okay? So it's very important that you get the county. Thirdly, you want to ask if they're married or they reside with anyone. A good way to ask that, because some people are weird, if you ask them if they're married and they're not, they get all weirded out. A good question to ask is, are you single, married, divorced, or widowed? You kind of give them all the choices. Which one are you? Well, I'm married. Okay. So you know that they're married. In the back of your mind, some of the Medicare supplement insurance companies will offer a discount to the individual if they're married. The other spouse doesn't have to buy the policy. A very fast, quick example is going to be Mutual of Omaha. Mutual of Omaha in most states, not every state, in most states, they will offer the policy to the individual if they're married at a discount, at the household discount. And some of them will offer it to them if they're not married and they're residing with somebody over the age of 60. And then there are some insurance companies that will offer a roommate discount. And what I mean by that is all they got to do is reside with anyone over the age of 18. So it's very important you ask that question because that's going to influence how you quote. We take a lot of business away from other agents quite often. And I can tell you that probably in about half the cases we win the business because the agent didn't properly quote. They didn't properly apply household discounts. So we come in at a much lower rate, a much better policy value proposition, and surprise, we get the business. And so it's very, very important you know that. And then finally, agents are just, accustomed, and clients too, very accustomed to putting their clients with the same insurance company. Now, I'm not trying to sway you away from that. All I'm trying to tell you is that it's not always necessary to place both a husband and wife with the same insurance company, especially when we know that an insurance company may give them a household discount just for being married. So in the case of that, you want to look at all the different parameters because you can essentially run the risk of future rate increases with that particular couple and not able to change either one of them due to a downturn in health. Whereas if you have them with separate carriers getting household discounts and one of those carriers shits the bed in rate increases, you can move the other one. Think about that. So again, it's not always necessary. And we usually tell people in the beginning, husband and wives, if we come to find out that there's a better value proposition for them and it meant going with different insurance companies, would you be okay with that? And more often than not, they'll say yes. So the tool that we use is through CSG. And for any of our partners, people that work with us, this is something that we offer to them at no cost. And basically, you're going to start by signing into the tool. And when you sign into the tool, you're going to have a couple of different options that you see here on the screen. We can run quotes for Medicare Supplement. We can run quotes for Medicare Advantage, and we're not going to talk about that today. Run quotes for final expense, which we're going to touch on a little bit today, and then run quotes for hospital indemnity. I'm not going to touch on that. Hospital indemnity and Medicare Advantage are going to be paired together at another one of these. Today, we're going to look at Medicare Supplement and final expense. We don't subscribe to dental and Market Pulse. If you're interested in a dental product, we have a very good dental product that doesn't require you to run quotes on. So we can certainly, discuss that at another one of these sessions. So we're going to do Medicare Supplement first. Along the left side, you can click the Medicare Supplement area, or you can just click it right here. And it brings you to this screen here, and it's asking you to put in a zip code. So I pulled one out of Ohio. I like Ohio a lot. It's a state I really enjoy working in. And it's automatically defaulted to female, Plan G, age 65. So we're going to make a couple changes here. We're going to assume we're working with somebody that's 73, very random, okay? We're going to keep it a Plan G. We're going to keep it a female. You can change that if you need to, but for this testing, we're going to do that. The household discount is not applied yet because we don't know yet. And, this is kind of an optional thing. If you were planning on giving the client a deliverable, we would put the client's name in here. Okay, we're going to call her Jane Doe. And then you would just click Get Quote. And we wait because computers are fast. And then all of a sudden, all these different insurance companies pop up in pricing. And the way that ours is set up is we have it already selected the insurance carriers that we contract with and that we work with on an everyday basis. I'm going to show you in just a second how you can see insurance companies that you don't contract with. That way, if you're in a competitive type of situation where you're fighting for business, you have all of the information of your competitor to talk intelligently about the insurance company. So people look at Medicare supplement plans the same way that we look at wine lists. We read them wine lists from right to left. People look at insurance pricing from left to right. But we're going to look at it from a little bit of a different perspective. And so we see all of these insurance companies, female age 73, Alexandria, Ohio. It looks like it sits in that one county. And we're looking at pricing from 118, and it goes all the way down to 332. Okay, and it looks like there's about 15 plans in there. So naturally, our eyes will immediately go to the lowest price because we want to save the client some money. We want to help them out. Everything is great. So what I would do in a case like this is I will open up the lowest price plan, and I will start to look at it. And what do I see here? Okay, I start to look around, and I see, all right, the company is rated an A-. That's fantastic. It's been in the market for 12 years, this particular insurance company and this particular zip code. So that's definitely a nice length of time to manage a block of business. I see over here the amount of lives that they're covering on a national level, how many lives they're covering on a state level, how much premium they're taking in. I see their loss ratio. Loss ratio tells us how much money in premiums are going out in claims. What percentage of their premiums that they pay go out in claims. And so I see the loss ratio there. And also market penetration. What percentage of all Medicare people that buy supplements have it with Medicare Corp Life Insurance Company. Over here, I see rate increases. Look at that. These are age rate increases. Because this is an attained age state, every single year it's written into the policy, the insured's premium is going to go up. So these are factual rate increases that you know factually they're going to get no matter what. The middle part are the community rate increases. These are those surprises that they do once a year or twice a year based upon claims. These are surprises based upon claims. So it looks like that this insurance company reduced rates in 16 and it reduced rates in 17. Reduced in 16, reduced in 17, didn't declare anything in 15. So for the last 3 years, their average community rate decrease was minus 5.7. Policyholders in this policy have been excited the past 3 years. So far, Medico is going to be the winner in this particular example. But I want to look at another one, okay? So I'm going to just kind of dive right down, and I'm going to go look at the big gorilla in the industry, okay? Right here. I see a lot of people talk about these guys right here. So let's look at the big gorilla, and let's see what the gorilla's doing right now. And the big gorilla has been around for a while, okay? And the big gorilla is community rated. Community rated means the only way they're going to raise the rates is if they raise it for everybody else. So their community rating in January of this year went up 6.6%. Look how big they are. Just in the state of Ohio alone, 45% penetration. Look at the pricing structure. Look at the difference. 171 versus 118. 171 versus 118. That's a lot of spread to go with a brand name. So immediately I'm knocking out that gorilla. So the other thing you want to look at, as I said before, is whether or not the person has a roommate. So if we apply the household discount, I know that this insurance company has a roommate discount. They will give a discount to anyone that resides with somebody over the age 18. Look what it does to the price. Brings it down from 118 down to 109, even more competitive. Now, this sounds like a commercial for Medico, and I assure you that it's not. Let's look like another insurance company. This one tends to be a little bit on the competitive side. It comes up a lot. And then also this one here. This one's heavily sold in the phone room world. Let's look at this one here, Cigna. Okay, it's like the phone room of choice. Cigna, if you look at their rate increases, and let me knock out these guys so we can do a comparison. And this is how you help the client choose. Okay. If you take a look, their age rate increases generally are around the same. On average, 3.3 versus on average of 3.2. This insurance company had rate decreases. This insurance company had a rate increase. Okay. This insurance company is priced higher than this one. I know that Cigna doesn't offer a roommate discount. I know that Medico does. Okay. They have about the same amount of policyholders in the state, and they're running at about the same loss ratio. So between the two, the client is better suited in this insurance company, Medico, for all of the reasons I had said before. Okay, so in this example, my recommendation, if the person is medically qualified, would be to go with Medico. Now, going into the underwriting aspect of it, and again, this is just how to use CSG, not getting into how insurance companies underwrite, but there's a little feature over here called add conditions. So let's go ahead and put in diabetes. Diabetes then tends to come up in conditions, and I don't really know how to spell right now, D-I-A-B-E-T-E-S. And let's do diabetes with high blood pressure, okay? Diabetes with high blood pressure. I think I just passed it. So you can go ahead and click on that, and look what happens. It tells you how it reads on the application. This insurance company has a look-back period of 5 years with diabetes with any heart condition, including high blood pressure. This insurance company it's not on the application. This insurance company, not on the application. This insurance company, if they have diabetes and high blood pressure, Mutual of Omaha, you can't offer it to them. It's an automatic decline. This one, United Life, automatic decline. This one, not on the application. This one, ever, automatic decline. So this kind of gives you a kind of a quick snapshot on how to help field underwrite your clients. Now, one thing I will tell you is I would not depend on this as being the absolute rule. I would depend on this being the guideline. So if this doesn't knock out, or whatever condition you pick doesn't knock out your carrier of choice, you always want to resort to that insurance company's particular underwriting manual to make sure that that condition is a condition that they would underwrite. Secondly, you always want to check the carrier's medication knockout list. So that's how you would do a CSG analysis on a Medicare supplement plan. So assuming the person didn't have that condition, our recommendation would be Medico Life. If you needed to compare two insurance companies, you can click them. And then over here, you can easily print up or do a PDF report very quickly. And when it pulls up, I'll show you what happens. Now, this is a very generically branded report because we have multiple agents using it. It does personalize it with their name. It does personalize it with their zip code, their age, non-tobacco, Plan G, and it sorts it by price. So you can always show this to the client and say, look, this is the one I'm recommending to you. Do you see how it stacks up with everybody else? Some people need visuals. Client says, yes, thank you so much. You're so honest. Let's move forward. Okay, moving on. You got a client and you want to talk about final expense. So you would go over to the final expense tab, and I'm going to put in the same zip code, same exact scenario, 73-year-old client. It automatically defaults to female, but let's change it to male. Already automatically does face value of $10,000, but let's move it to $25,000. And you got a good shot that the client is going to go a level benefit, you know, based upon your initial conversation with them. You know that they're not going to go graded. You know that they're not going to go modified or return of premium. You have a good feeling they're going to go level. So we're going to go ahead and get the quote, and you could put the name in there too. I just forgot to do it. And it feels like this training is going a little bit past 15 minutes. I think we're at the 15-minute mark now. So I'll go a little bit quick. Same concept. Instantaneously, the insurance companies pop up. If you take a look, all these different insurance companies or insurance companies that are available to our partners that we work with. And if you take a look, a lot of these are very phone-friendly. Sentinel, Equitable, Liberty Bankers, well, not that Americo, but Foresters, Royal Neighbors of America. These are all loyal American. These are all very phone-friendly final expense carriers. This is a face-to-face final expense carrier. You have to be super healthy for these guys, but for the most part, in this example, I would be recommending Sentinel, assuming they can pass underwriting. And it kind of just gives you a little bit of information, not much. It tells you the years in the market. If you were going to write the policy, you can click the box electronic application, and it would automatically take you over to Sentinel's website for you to log in. Same thing with Equitable. Equitable is another one that we write. Very good, instant decision over the phone. 49 years of doing this. You can instantaneously click electronic application. Takes you right to the website to get the ball rolling. But with these two insurance companies, you don't need to type anything in the computer. But for the same example goes over here, you can add in a condition. We can call a condition, we'll say COPD, for example. I'll plug that in. I know that's a knockout question for a lot of insurance companies, but it kind of shows you what the 2-year look-back period is for treatment and whatnot. But here, COPD would be off the table. This one, just because it says the health questions are not available, it just means that CSG hasn't connected them in. But over here, you'll see if they're ever diagnosed with COPD, Omaha won't take them. Liberty Bankers, this is the preferred. The look back is 2 years. So same type of concept. Let's just say in this example, you are going up against another agent. I meant to show you this in the Medicare Supplement scenario. Let's just say you're going up another agent. If you uncheck this area here that says My Companies, all of a sudden you have every single final expense product that's for sale in the zip code. Look at this. Look at this, like 100 different ones, okay? So if you got a client on the phone, or if you're meeting with a client and they say, listen, Joe, I really like your Sentinel price of $197.80. However, I have an agent that's offering me $190.50, and you say to yourself, how could that be possible? You can take a look and see that it's EMC, okay? And then what you can do is you can, maybe take a look at the policy. I don't know what that means, increasing whole life level 3, and that might be increasing benefit, it might be increasing premium, I don't know. But the point that I'm getting to is you can take a look at the policy and you could try to poke holes in it so that you become competitive, okay? If they tell you that, I got offered $140.27, that that may not be a reality, because this insurance company, you got to be super duper healthy, and the person's sitting in front of you with diabetes and something. So again, it's just a tool that can help you close. It can help you do more business. It's a tool that we use on an everyday basis. It's a visual tool. It has all the information. It tells you exactly what the pricings are for all the different companies. It tells you how to be most competitive, and it tries to make your life as simple as possible. I would encourage everyone to use CSG for both Medicare Supplement quoting, and I would encourage them to use it for final expense quoting. You just got to practice with the tool a little bit. You got to get comfortable with it. You have to understand a little bit that it's a lot of information that is very powerful, very, very powerful. If you come across a client and the client says, somebody recommended to me Equitable National, you can say to them, well, guess what? It's only got 18 policyholders in the state. 18. 181 in the whole country, the entire country, 181 policyholders. Do you really want to go into that insurance company right now? Or do you want to just give them a little bit of time to kind of manage their portfolio, see how their risk management is, see how their claims. So it kind of makes you extremely competitive, because then you can pick an insurance company that's been around for a little bit longer, that has a little bit more of a history, and you can be a little bit more competitive in your recommendations. You're not always going to hit the nail on the head, but when you use the tools that are available to you, it makes you a more powerful agent. So that is the conclusion of CSG. What are the next steps here? If you are part of our network, certainly reach out to us for the username and the login to CSG. This is a free service to everyone that works with us. If you're not in our network, perhaps we should entertain a call to see if we're a good fit for each other. We're not a one-size-fits-all agency. What we like to think of ourselves as the Malbec of wines. I'm not a drinker, but if you are a wine drinker, you will know exactly what I mean when I make the analogy as the Malbec of wines. If there are any carriers that you have seen in this training that you would like to learn more about and see if they could be a good fit into your product portfolio, let us know. And you can email us at nationcareservices@gmail.com. You can call or text me at area code 561-276-3280. And finally, again, my name is Joseph Tritola, and thank you for watching.